Bitcoin was tiny back then, and he kind of pointed that as it gets bigger, it's inevitable that we'll see some pools of capital find ways wherever they can to short fiat currency and be long Bitcoin. I think the thing about Treasury companies is they can do it with better types of leverage than most other pools of capital have access to, which is interesting and gives them an edge. I'm bullish on Bitcoin. I like the fact that they're holding Bitcoin. I'm not going to say let them manage Bitcoin for me. I'm also going to hold Bitcoin. But if I'm looking at the universe of stocks I can own, that's an interesting strategy because they can employ, in some cases, a little bit of leverage or not. They have cash flows or not, and they're doing something with their Bitcoin that can allow that company to, thrive through multiple cycles.
Bitcoin is now trading close to $120,000, just shy of its all-time high near $123,000. After breaking key resistance levels earlier this month, momentum has stayed strong, with charts showing a rising channel that could push prices toward $125,000. While we've seen minor pullbacks from profit-taking, trading volume remains high, and new policy changes allowing retirement funds to invest in crypto are bringing in fresh capital. Many analysts believe this could fuel another leg higher, with some calling for Bitcoin to reach $130,000 by the end of the year. At the same time, Treasury companies are becoming an alternative way to gain exposure. By combining Bitcoin holdings with cash flow and strategic management, they can handle market swings more effectively. As Lyn Alden explains, these companies may give investors the best of both worlds, Bitcoin exposure plus the stability of a corporate structure.
And I think broadly, Treasury companies make some degree of sense because if you have an appreciating asset, and Pierre Richard wrote about this back in 2014, the idea of a speculative attack, and Bitcoin was tiny back then, and he kind of pointed that as it gets bigger, it's inevitable that we'll see some pools of capital find ways wherever they can to short fiat currency and be long Bitcoin. I think the thing about Treasury companies is they can do it with better types of leverage than most other pools of capital have access to, which is interesting and gives them an edge. And I think that by the end of this cycle, we probably will see some Treasury companies fail. I think there will be low quality ones that get over their skis. So anytime you link leverage with something, you're increasing the risk. I do think the highest quality ones are valid. And this particular discussion happened. So I went on Strategy's earnings call as one of their analysts. And I actually asked the bearish question of the group, which is basically asking about stress testing during the next bear market. Like what kind of bear market are they kind of modeling or thinking about as they design their capital structure? And they provided their answers. And then also I generally agreed that their new preferred, which they're pretty excited about, is I think it's hitting a sweet spot that the market wants. So I expect it to be successful. And in one of my two threads, Andy and I went back a little bit and forth a little bit because I'm generally in the cautiously optimistic camp around these treasury strategies. Depends on the specific company in question and the quality of the management team and everything else. Well, I would say that unlike an ETF, MicroStrategy and other treasury companies that are operated well tend to increase their Bitcoin per share through these strategies, through this kind of debt and equity issuance strategy. And so you're paying a premium over the Bitcoin they have, but then you're also expecting this per share Bitcoin to increase. Now, there's different ratios that analysts have come to use, basically trying to figure out how much of an MNAV to apply based on forward, how much they expect Bitcoin increase per share. I've actually raised the concern that the problem with that is it's recursive, because the higher their MNAV is, the faster they can increase their Bitcoin per share. And so that flywheel is really good on the way up, but can also just unravel very quickly when sentiment changes. It's different than, say, evaluating a company based on cash flows from operating a pipeline business or something. And so while there's merit in that analysis, it's a new form of analysis, and it's inherently just challenging. My general view has been that I don't know what the right MNAV is. It certainly depends on the company. For example, Metaplanet is smaller, is in a jurisdiction where there's a really big tax arbitrage, which is different than the United States. So that they're actually tax advantaged there. And they started from a smaller base, so they've had very high MNAV and have grown very quickly. It's come down more recently. So I think that MNAV is somewhat context dependent. partially based on how much you expect them to be able to kind of arbitrage this. Generally speaking, as they get bigger, we should expect the MNAV to gradually compress because trees don't grow to the sky. Now they can continue growing. It just that after a while, that MNAV generally starts to compress. That's so far what we've seen in the market. But I do think that an MNAV above 1 makes sense when you can attach this longer duration debt to Bitcoin and therefore get through periods of cyclicality, at least if managed well and conservatively, compared to the way that hedge funds lever, the way that retail investors might lever. And so I think it's worthy of a premium. I would like to see eventually more cash flow generating businesses have Bitcoin on their balance sheet. The kind of history of this space. So MicroStrategy did the approach. They actually then ran a number of conferences called Bitcoin for Corporations, trying to get other corporations to do it. We saw Tesla dabble in it. Block got in to some extent. We didn't really see a lot of other companies with existing operations decide to add Bitcoin. Instead, in this cycle, we've seen a number of companies that kind of spun up to do the strategy, as well as increasingly around the margin, some existing companies do it. So I think there is a bigger market for companies that just use Bitcoin as a treasury asset while also having separate cash flows.
Cyber criminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
But then clearly there has been demand for 5 years now, and I think ongoing, for a levered kind of pure play Bitcoin entity. And then I think the main questions to ask are how do you value that? I generally err toward conservative. And two, how do you manage the risk so you don't have a very large blow up, especially among the larger ones in the market?
So Lyn, you started this by saying that you're not necessarily bullish on all treasury companies and you think that some will fall by the wayside. Do you think the companies that are essentially zombie companies that are doing a Bitcoin treasury play are going to be unsustainable going forward? And what we need is real companies with real business models adopting Bitcoin?
So there are somewhat different types of zombie companies. In some ways, the perfect candidate to do this is one that's like a value stock that's cash flow positive, but doesn't really have any growth prospects to add Bitcoin. That's really interesting. And we haven't really seen a lot of that. Truly zombie companies that have like no cash flows, that's a much harder sell. Generally speaking, so far, we've seen that the market certainly does not like unprofitable companies, companies that are losing money to adopt a strategy because they view that as a distraction and a risk versus their kind of Bitcoin approach. So I certainly think it makes sense for companies to at least have your profitability like neutral. And I think there is a market for ones with cash flows. They don't have to necessarily have growing cash flows. And really at that point, Bitcoin competes with other uses of capital like buying back shares, paying dividends, paying down debt. They can employ that as one of their potential strategies for what to do with their excess earnings over what they require for reinvestment. I mean, there's a number of points there. One of the earliest ones was why Bitcoin? Why buy Bitcoin with cash? Historically, the answer is because it's the best performing thing you could buy with your cash, pretty much. And then the thesis going forward is that it's going to
100%.
continue to be either the best or one of the best things you can do with your cash, especially that it's not a security. So there's with U.S. stocks, there's kind of a limit on how much securities you can have in your asset mix. It doesn't apply to Bitcoin, which is a digital commodity. And so the combination of high expected returns based on those who, generally speaking, those at strategy and those who invest in strategy are bullish on Bitcoin. So I certainly wouldn't recommend a Bitcoin treasury strategy holding for those who just aren't particularly high conviction long-term bulls on the asset.
Some treasury companies are using Bitcoin to boost growth. raising capital through debt or equity to increase Bitcoin per share. This creates a cycle where higher valuations allow more Bitcoin accumulation, but it can quickly reverse if market sentiment turns. Unlike ETFs, valuing these firms is complex and depends on factors like company size and tax environment. Investors are showing more interest in profitable companies adding Bitcoin to their balance sheets, while unprofitable firms doing the same are seen as risky. Overall, Bitcoin remains a top cash investment for those confident in its long-term growth.
There's a valid reason to have high expected returns on Bitcoin based on historical returns?
Not just on historical returns. I employ a number of analysis methods to determine what I expect Bitcoin to do. I still think that the total addressable market of what Bitcoin can address is much larger than the current size. In my expectation over the next 5-10 years, I do expect Bitcoin to still have high returns. Now, not the returns that when you go from $1 billion asset to $1 trillion asset, but I certainly think it can 5x and 10x from here, and we'll see how the numbers shake out in the years ahead. And it's also the risk situation is different than before. So when Bitcoin was tiny, it didn't even have the liquidity for like a corporation to buy it. It didn't have the regulatory clarity in many cases either. And so now that the tax treatment of it has improved, regulatory clarity has improved, and it's a big and liquid enough asset, the expected forward returns are not as explosively high by most analysis methods than they used to be.
Yeah, I get why you are buying Bitcoin versus anybody else, or for that matter, I can do it on my own, so why are you doing it for me? Like, where's the edge?
I think the main thing is that Bitcoin's the first asset that can actually compete with equities long-term in returns. And so prior to this, when corporations had excess capital, they generally decapitalized themselves. They would give it back to shareholders. They would pay it in dividends. They would pay it in buybacks. They would sometimes make acquisitions for the sake of acquisitions because they don't know what else to do with the money. That's often a criticism that especially some tech companies tend to do. One of the downsides is that makes the company more vulnerable in the future if they don't have something good to save with. Kind of like how households want to save for unplanned things in the future. Generally speaking, corporations want to save for unplanned things in the future. And there's just not been a great vehicle for that. Even gold, because gold over the long arc of time underperforms high quality equities, it's hard to justify holding a lot of it on your balance sheet longer term if you're a company that's trying to be in the top third of the S&P 500 returns or something like that.
But I think you're saying the same thing. I think you're saying that you think Bitcoin is going up. I'm saying a different thing, which is, why should I trust a company that manufactures, creates software, does whatever it does as a business, to have the expertise that you do?
Well, I think in many cases you shouldn't. And when companies adopt the strategy, many of them don't get very high MNAVs because the market says, well, who are you? Right. So they look at strategy and they say, well, these people have been doing it for years now. They look at, say, Metaplanet, and they know the people running that. I mean, I know the people running that, and they think that, okay, I'll trust those people to manage this well. So it's certainly a company by company basis. And some of these companies have hired Bitcoin analysts, Bitcoin experts in various capacities to help them do the strategy, and then the market assesses, do they think they have the right people on board to help that company with the strategy? But basically, the answer is, one, in the near term, there's an arbitrage. The market likes it. But two, longer term, as Bitcoin kind of grows and becomes less volatile, but still has the absolute scarcity aspect to it, which is desirable, it's one of the few assets that I think there's a reasonable case it can be made that it is able to keep up with equities over a pretty long span of time, if not outperform equities. And therefore, if a company doesn't want to fully decapitalize itself, it doesn't want to say, okay, we're going to take all of our excess capital above what we need for working capital and give it back to shareholders. We want to plan, for a pandemic lockdown or a big new competitor comes to our market. We need to make major capex to change or pivot our business. They want to have something that they can hold for 5-10 years as part of their asset mix. And I think Bitcoin brings that in a way that other assets haven't.
The reason they can potentially outperform you just buying Bitcoin, I assume, is just the access to capital markets. Is that right, Lyn?
Partially it's the access to capital markets. Yeah, that they can do certain types of leverage that others can't, especially those that don't want to make 1 year or 18-month bets on the price, but just want to say, okay, this company plans on doing this for the foreseeable future, and they want to maintain conservative leverage ratios in debt that's not really callable during a bear market, as long as they don't get liquidated in some capacity. They're unable to make coupon payments or something, and so I'm going to let them do it. Is how many pools of capital do. Now, I'm with you that I don't think anyone should say, okay, sell your Bitcoin and go buy a Bitcoin treasury company. I think that there's larger pools of capital that just for a variety of reasons can't own Bitcoin. Sometimes they can't even own the Bitcoin ETFs. And so they can go out and buy companies or either their equity or their bonds that give them some degree of Bitcoin price exposure if, say, a fund manager happens to be bullish on Bitcoin. There's now a capacity to do that. And then two, if you're that company themselves and you're not, you do any other business that's not Bitcoin, could be software, could be, a gasoline pipeline business, whatever the case may be. And you say, well, we're decapitalizing ourselves. We're giving back cash to shareholders, which makes sense. But if you want to have something that we want to hold, say 20% of our retained earnings in something longer term for unexpected events or to grow over time, that's certainly one of the things that they can do. In MicroStrategy's case, and they've actually talked about this, when they were a software company, they had flattish income. They were no longer a growth company. It's a very competitive market. A lot of their competitors had gone out of business. They were up against really really big conglomerates at that point, and they generally found that nothing they did was enticing to the market. So buying back shares didn't excite the market. Holding a lot of cash didn't excite the market. And they've even talked about how they would eventually start losing executives that go want to work at things where that there's bigger and more scale. And so by becoming a larger company, partially through their treasury strategy, they were able to keep and retain really good executives. So sometimes decapitalizing yourself is the answer. Because it's kind of a decision that the investor will make better use of that cash than the company will. And that's certainly better than a company holding it and then misusing the cash. But there's also an argument to be made for putting some of it into something that can appreciate long term and give the company survivability through problematic events, as well as to become larger over time, which then potentially down the road could result in larger acquisitions than they could do without having done the strategy. And then investors might say, well, I like the underlying business. And I like the fact that I'm bullish on Bitcoin. I like the fact that they're holding Bitcoin. I'm not going to say let them manage Bitcoin for me. I'm also going to hold Bitcoin. But if I'm looking at the universe of stocks I can own, that's an interesting strategy because they can employ, in some cases, a little bit of leverage or not. They have cash flows or not. And they're doing something with their Bitcoin that can allow that company to, thrive.
Lyn Alden explained that Bitcoin's future returns aren't just about its past performance. She believes its total addressable market is still far larger than today, and over the next 5 to 10 years, it could deliver strong growth, maybe 5 to 10 times higher, though not as explosive as in its early days. With better liquidity, regulatory clarity, and favorable tax treatment, Bitcoin has matured into an asset that can now compete with stocks for long-term returns. Companies are also starting to see it as a strategic reserve, offering protection and growth in ways that cash, gold, or traditional assets cannot. She also pointed out that treasury companies holding Bitcoin can sometimes outperform direct ownership. They have access to capital markets, can use conservative leverage, and give investors exposure who might not be able to hold Bitcoin or ETFs themselves. Strong management teams gain higher trust, and this strategy could help corporations preserve capital, retain talent, and expand over time. Do you believe treasury companies holding Bitcoin will outperform direct ownership in the long run? Would you rather invest in Bitcoin directly or through companies managing it? Let me know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.